New at 5, the former treasurer for Santa Cruz County is now facing criminal charges for allegedly stealing more than $38 million in county money. More than $38 million stolen from taxpayers. No one disputes the former treasurer of Santa Cruz County stole that money.
A pretty shocking case of government corruption in southern Arizona. Down in Santa Cruz County, the county treasurer will spend 10 years in prison for embezzling $40 million from county taxpayers.
The alert came in at 11:43 on a Tuesday morning in April. A fraud detection algorithm inside a major national bank had flagged 11 wire transfers, all originating from the same small county government account in the Arizona borderlands. The transactions did not match any approved disbursement signature. They were not payroll. They were not contractor payments. They were not infrastructure bond transfers. They were outflows into entities the bank's compliance team could not cross-reference against a single verified government vendor. The team escalated within the hour. By early afternoon, the financial crimes referral had reached a federal desk in Phoenix. What followed would unravel a theft that had been operating undisturbed for 6 consecutive years. A theft committed not by an outsider, not by a sophisticated cyber actor, not by any organized criminal network, but by the one elected official in the entire county whose sworn duty was to protect the money. Santa Cruz County, Arizona, is pressed against the southern border the way a forgotten photograph is pressed inside an old book, present, largely unnoticed, and holding more than it appears. The county seat, a sun-weathered border town called Nogales, is a place of low concrete buildings, corrugated shade structures, and streets where the American and Mexican flags are both visible from the same corner. It is not a wealthy place. The median household income here sits just above $50,000 a year. More than 1 in 5 adults lives below the federal poverty line. Nearly a quarter of the county's children grow up without economic stability. The school buildings show their neglect in water-stained ceiling tiles and crumbling classroom walls. The Rio Rico Fire District, protecting the county's dry northern brush country from seasonal wildland fires, operates an aging fleet of trucks that should have been replaced years ago but were never funded for replacement. This is a community without surplus. Every property tax dollar collected in Santa Cruz County has a direct human destination: a classroom, a fire station, a public health clinic, a road repair crew. None of it was ever intended to become livestock. In the spring of 2012, a woman named Elizabeth Gutfar ran for the office of Santa Cruz County Treasurer. Her campaign was built on 3 words: trust, accountability, community. She won. Then she won again, running largely unopposed in subsequent election cycles. By the time federal agents opened their investigation, Gutfar had served as the county's elected treasurer for more than a decade. She was a recognized fixture at county board meetings, a familiar face at school ribbon cuttings, the kind of local official whose name appears in community newsletters and whose presence at public events reads as a signal that everything is being looked after. Her own defense attorney would later acknowledge in federal court documents that Gutfar possessed no formal training in finance, no academic background in accounting, and no professional certification in public fund management. That she never should have been placed in charge of a county treasury. The community trusted the title. Nobody examined the person behind it. The theft began in 2014, 2 years into her tenure. It started quietly, a single wire transfer, an outbound movement of county funds that did not correspond to any authorized disbursement on record. The transfer did not go to a government contractor, a state agency, or a public utility. It went to a private, limited liability company that Gutfar had quietly registered months earlier under a name suggesting legitimate commercial activity. The entity had a professional-sounding designation, a registered agent address, and no employees, no clients, and no operations. It existed entirely on paper. a vessel built to receive stolen public money and make it appear at a glance like a routine business payment. From those shell accounts, the funds moved again, wired into personal bank accounts held in Gutfar's own name. The initial transfers were deliberately modest, small enough to avoid triggering automated review thresholds. But the confidence that arrives with not being caught has its own compound interest. Over time, the transfers grew larger, more frequent, more embedded in the rhythm of county financial operations. What had begun as a test of the system's blindness became a fixture of her workflow. And fixtures become invisible. What elevated this theft from brazen to almost incomprehensible was a single technical maneuver. Santa Cruz County's wire transfer authorization system ran on a dual approval protocol. Every transaction required two separate human sign-offs, one employee to initiate the transfer, a different employee to approve it. A basic but critical safeguard, standard practice in public fund management, designed precisely to prevent any individual from unilaterally authorizing their own transactions. Gutfar defeated it without touching a line of code. She stole the digital access credentials of a subordinate employee in her office, someone who worked beneath her, reported to her, trusted her daily, and had no idea their login was being harvested and used as a passkey to the county's funds. With that stolen access token loaded into her own authenticated session, Gutfar could both initiate and approve her own wire transfers. She became the only voice in a conversation she was conducting with herself. And the authorization system logged every transaction as properly verified by two separate parties. Consider the weight of that for a moment. An ordinary county employee, someone who came to work each morning, maintained their responsibilities, and protected their credentials with the expectation of professional trust, spent years with their identity being used as a cover story for theft they never witnessed and never committed. Their name attached to wire transfer approvals they never issued. Their access token opening doors they never walked through. That particular betrayal does not dissolve with a federal indictment. It follows people. It reshapes the way they think about the workplace they return to after the headlines fade. Over the course of 6 years, Gutfar executed 187 fraudulent wire transfers. Nearly $39 million moved out of Santa Cruz County's general operating fund through those transactions. To prevent the hemorrhage from surfacing in routine financial reports, she systematically falsified the county's accounting records. Cash reconciliation statements were altered to reflect balances that did not exist. Investment portfolio summaries were manipulated to project financial health the county did not have. Monthly reports submitted to the county board and forwarded to state oversight bodies were constructed around numbers that bore no relationship to the actual movement of funds. And not once, not for a single dollar across 6 years of ongoing theft, did she report any portion of the stolen income on her federal tax returns. By the time prosecutors completed their forensic accounting reconstruction, she had evaded more than $13 million in federal tax liability. If you are following this and wondering how 6 consecutive years of county-level financial audits failed to surface any of it, you should be wondering that. Stay with us, because that answer is as troubling as the crime it failed to stop. If this is the kind of investigation that changes the way you think about the people managing your local tax dollars, subscribe now so you never miss the next one. Because what Elizabeth Gutfar spent that money on tells you exactly who she had decided those $39 million belonged to. Federal investigators later reconstructed the spending record in full. She purchased at least 20 vehicles, high-end pickup trucks, luxury SUVs, and specialty farm equipment, registered to herself and family members, none of it public county property. She acquired multiple parcels of real estate, including residential properties on both sides of the Arizona border. She financed the renovation and substantial expansion of a family ranch that federal court documents describe as featuring a large and luxurious residential structure, complete livestock infrastructure, equestrian facilities, and multiple operational outbuildings across significant acreage. She funded a functioning cattle operation. She maintained a working horse ranch. She covered the cost of one family wedding as a personal gift to her son. She hosted a second family celebration at the renovated property itself, a venue constructed stone by stone and fence post by fence post, with funds that had been earmarked for school operating budgets, fire equipment procurement, and basic county services. Luxury clothing, international travel. Every line item on her personal financial ledger was a line item absent from Santa Cruz County's public record. Hold that contrast. In a county where children went to school in buildings with roof leaks and outdated electrical panels, their elected treasurer was building a private ranch estate on their parents' tax dollars. In a border community where fire crews loaded aging brush trucks and drove into terrain that dries to a fire hazard every summer, the official who controlled the procurement budget had been redirecting their fleet replacement funds for 6 straight years. In a county this size, fewer than 50,000 residents, a total operating budget measured in the tens of millions, every falsified reconciliation statement is not a number. It is a school that does not get repaired. It is a fire truck that does not get replaced. It is a community that keeps being told resources are not available without ever being told why. And for 6 years, the Arizona State Auditor's Office did not catch it. Annual reviews of Santa Cruz County's finances were conducted. Reports were generated, submitted, and filed. Not one of those audit cycles flagged the unauthorized outflows, the unverifiable shell entity recipients, or the credential anomalies that federal investigators would later describe as clearly visible once access logs were read against transaction records. The state audits reviewed financial statements that Gutfar herself had prepared. They did not independently verify the source accounts those statements were supposed to represent. They certified the paperwork. They never examined the vaults behind it. Gutfar had apparently intuited the dimensions of that gap, or stumbled into them, and had spent 6 years working precisely within the space where the state's oversight machinery stopped looking. Then, on a Tuesday morning in April, a bank algorithm did not stop looking. The Fraud Compliance Division of a major national bank scanning wire activity across thousands of commercial and government accounts flagged the cluster of 11 outbound transfers from Santa Cruz County's primary operating account. The receiving entities could not be matched to any entry in the county's verified vendor database. The transaction description codes were inconsistent with any recognizable category of public disbursement. The compliance team notified county officials within hours. By end of business that day, Gutfar's access to the county's financial platforms had been fully revoked by the Board of Supervisors. The FBI Phoenix Field Office and the IRS Criminal Investigation Division opened a coordinated federal probe the following morning. The forensic accounting team assigned to Santa Cruz County afterward described the reconstruction as demanding, but not cryptographically complicated. The transfers had been logged. The shell company registration documents were in state databases. Property deed filings were publicly recorded. Vehicle registrations were traceable through state motor vehicle records. The money trail was not sophisticated. It had simply never been read by anyone with the authority and motivation to read it. Federal investigators cross-referenced 6 years of wire transfer records against corporate entity databases, property ownership archives, personal tax return filings, and bank account ownership records. The shell companies dissolved under examination almost immediately. Within weeks, the full extent of the scheme was mapped and documented. Goodfar resigned on April 12th. Her letter was brief. County Supervisor Rudy Malera, who had worked alongside Goodfar for over a decade and considered her a trusted professional colleague, told federal investigators that her ability to sustain the theft had been built entirely on the accumulation of trust. That she had stolen from the community while attending its events, shaking its hands, accepting its repeated endorsement at the ballot box, and sitting in the county boardroom as a peer to the officials who were supposed to oversee public finances. That is when the full measurement of what had been lost began. Drop a comment below if you believe state auditor offices should face formal accountability when years of mandated oversight fail to detect fraud this consistent and this documented. Because what that question touches is not just this case. It is every small county in America where annual audits are treated as compliance rituals rather than independent investigations. When federal investigators totaled the damage across Santa Cruz County's operating entities, the count of affected parties exceeded 15. School districts, special tax districts, the Rio Rico Fire District, civic infrastructure funds, and the county general fund itself. Each had sustained losses ranging from several $100,000 to multiple millions of dollars over the theft period. The Rio Rico Fire District confirmed it had lost approximately $1.6 million during those 6 years, funds that had been allocated in part for the procurement of brush trucks rated for the terrain and ambient temperatures of southern Arizona's summer fire season. The trucks were never purchased. The fleet that existed when Goodfar began her scheme continued to age and degrade through every season of that drought-prone landscape. Crews continued to deploy in equipment that maintenance records indicated should have been decommissioned. The cost of chronically underfunding wildland fire response is not expressed in audit line items. It is expressed in the margin between what a crew can do and what the conditions demand of them. Teachers submitted capital repair requests that were denied year after year. School board administrators submitted renovation proposals for buildings showing structural and mechanical age, received revised budget projections that made those proposals impossible, and were never told why the numbers kept falling short. They adapted, they stretched resources, they worked around what they couldn't fix. None of them knew the reason the money wasn't there. They just learned to function as though it never would be. A resident named Bonnie Titer came to the federal sentencing hearing and addressed the court personally. She told the judge that children in Santa Cruz County spent their school recesses outdoors in full desert sun because the school buildings had not been funded to renovate the interior common areas where those children should have been able to find shade and gather. Another resident, Wendy Isles, told the court that the mistrust now settled into the fabric of the community was something she felt at every public meeting she attended, a suspicion that had not existed before the arrest, a civic wound that had no clear timeline for healing. People want transparency, she said. People want to know that the person behind a title of public trust is actually what that title represents. In the fall of that year, Elizabeth Goodfar appeared in federal court and pleaded guilty to 3 felony counts: embezzlement by a public official, money laundering, and federal tax evasion. The prosecution presented the case without theatrical flourish. 187 transactions, 6 years, a stolen access token, shell companies with no legitimate operations and no purpose beyond receiving public money. The dollar figures, read sequentially into the court record, created a particular kind of cumulative weight, each figure individually comprehensible, the aggregate staggering. The defense and prosecution had together recommended a custodial sentence not exceeding 6.5 years. The judge examined the recommendation. On a summer morning, United States District Judge Rosemary Marquez took the bench and addressed the defendant at the defense table. Her language was precise and unsparing. She noted that she sentenced individuals in that courtroom on a regular basis who arrived having fought through circumstances most people never encounter. People who had stolen to survive, to feed families, to manage dependencies born of poverty and despair. People who had been failed by systems before they ever came before hers. Gutfar, the judge stated, had none of those circumstances. She was an elected official of the public trust. She had stable employment, institutional authority, community standing, and the complete demonstrated confidence of every resident in a county that functioned on the margins. There was nothing in her background that constituted a mitigating condition. There was only a sustained, deliberate choice made repeatedly across hundreds of transactions over 6 years. Judge Marquez sentenced Gutfar to 10 years in federal prison, 120 months, followed by 3 years of supervised release. The restitution order was fixed at approximately $51.8 million, payable to Santa Cruz County and to the United States Treasury. Gutfar apologized to the people of Santa Cruz County. The courtroom received the words quietly. A court-appointed federal receiver began liquidating recoverable assets immediately after sentencing. The ranch was placed on the market. The vehicle fleet was cataloged and staged for public auction. Rows of trucks and SUVs, purchased over 6 years with county funds, lined up in the inventory lot of a government property services contractor. Livestock was appraised and sold. Personal property acquired with stolen money, clothing, furnishings, recreational equipment, was inventoried and assigned for disposition. The total estimated recovery from the liquidation process was projected to fall somewhere between $10 and $13 million, roughly 1/3 of the total theft. The remaining 2/3 had been spent, consumed, and converted into things that do not sell at government auction. 2 county supervisors who had served without raising formal concern during the years of Gutfar's scheme were voted out of office in the elections that followed the disclosure. Santa Cruz County filed a formal civil lawsuit against the state auditor's office, arguing that a fraud compliance division at a national bank had identified the theft within 11 flagged transactions, while 6 years of state-mandated annual audits had identified nothing. That legal action is ongoing. And here is the question that endures when the coverage stops. How does one person, operating without offshore banking infrastructure, without advanced encryption, without any international coordination, without any co-conspirators, move nearly $40 million out of a public treasury across 6 years and never trigger a single formal inquiry? The answer is structural. The system trusted the office. It audited documents the officer had herself prepared. It conducted annual reviews calibrated to verify compliance with reporting formats rather than to independently confirm the accuracy of underlying account movements. It delegated oversight to a state body that treated mandated audits as procedural obligations rather than investigative exercises. And the credential theft that made the entire mechanism possible, a subordinate employee's access token, taken and weaponized across hundreds of authorized-looking transactions over 6 years, was never flagged because nobody at the county level was monitoring behavioral access patterns. The bank was monitoring. The bank found it in 11 transactions. In counties across this country, Single elected officials frequently hold near total administrative authority over public funds their communities cannot afford to lose. They run for office on name recognition and the institutional weight of a title. They are re-elected because the audits return clean and nothing surfaces as wrong.
The budget presentations are made. The compliance forms are submitted. The community goes on. And in some of those counties, the money is moving right now. The gap between what a community was promised and what it will actually receive is accumulating, and the system that is supposed to flag it has not yet looked. Santa Cruz County is still in the work of rebuilding. The fire district is pursuing state emergency equipment grants. School administrators are navigating years of deferred capital improvement projects, now prioritized against budgets that are already strained. The civic trust that Wendy Isles described as wounded, the foundational belief that the elected official holding the community's money is actually holding it for the community, is not repaired by a restitution order or a prison sentence. It heals through years of demonstrated transparency, through the slow and ordinary accumulation of accountability that should have been present from the beginning. The damage that cannot be quantified is the part that never appears in any federal court document. Remember, this story is a work of fiction, created for educational and entertainment purposes. If you found this compelling, subscribe for more investigations into the systems built to protect public money, and the officials who find the spaces where those systems stop watching. Thanks for watching.